Okay, so what does accumulation look like in a bull condition or when it's bullish? It's not important that we zoom in here and see any of the details. I just wanted you to see the overall characteristics. In the green shaded area, you can see that there's a consolidation around the opening price, and that consolidation leads way to a decline, which gives us the framework for what does manipulation look like in a bull condition. Well, this is what manipulation looks like right before the market starts to trade higher after consolidation when the accumulation of longs are being made. The problem is you see that decline below that green shaded area as weakness. And who would be wanting to buy ahead of that? Smart money traders, okay, they have very deep pockets. And the market has a tendency of creating this fake move, okay, where it entices or induces the opposite mindset or sentiment. This drop down out of that consolidation when we're overall bullish is manipulation. It's knocking out short-term lows. So anyone that's long, they're knocked out. They can't profit from the up move. And it's also putting traders in on a breakout short, and they're going to be on the wrong side of the marketplace. And then finally, at the highs of the day, we have our distribution where the smart money exits their long positions by selling above an old high where buy stops would be resting. So those buy stops would be hit, floods the market with buy stops, buyers at a higher price. Smart money is going to sell their long positions to higher buying interest traders in the form of their buy stops being tagged. Okay, and what does accumulation look like in a bear condition? We have a consolidation and price moves higher, which would be the manipulation. Now, if you look at the left side of the chart, you see a double top. That's exactly where what? Buy stops would reside. Okay, lesser informed traders would have their buy stops resting above that. It would view that as a stiff resistance price point, and those levels are too clean. The market will, in fact, want to go through there, probe it for buy stops. Those buy stops are going to be triggered. Anyone that's short is now allowed to be profitable in the move going lower. So they're neutralizing their shorts by hitting their buy stops. Also, breakout artists that see that equal high to the left of the chart and the consolidation that move out of that, they would be buying that on a breakout or trying to buy strength in their eyes. Both are incorrect. And what we're actually seeing is the market driving higher to pair traders to buy higher or at a high price, and short sellers on the smart money camp, they're going to be selling short to those individuals that want to buy at a high price to make a profit as the market moves eventually lower. Towards the end of the day, we see the distribution cycle come in where short holders in the smart money camp are going to be looking to collapse their short positions. To get out of a short position, you have to buy it back. You have to look for an area to run below old lows. If you look at the original consolidation, 20 pips below that, that's where we see the low of the day form. It's exactly where smart money would be collapsing their short positions for a day trade. And we see the ending cycle there, distribution. Smart money collapsing their short in the form of buying it back at an area where sellers below the market would be interested in selling. Overall, if you understand this concept, and there's lots more of information that's coming by way of my tutorials, you can look at the marketplace like this and see the original consolidation here in the green. The market reaches down below the consolidation into an area of liquidity, which is 10 pips below equal lows. Those sell stops are triggered where smart money would be buying. Once those sell stops are tripped, they're buying the low of the day. The market rallies up. We have an expansion move or range expansion up into a move of running 20 pips above the old high. Then your distribution cycle goes into the marketplace, and there's a complete daily range using the Power 3 concept that I've outlined here. So hopefully you found this teaching insightful. There'll be more built on this with the future tutorials. And until next time, I wish you good luck and good trading.